Welcome to the Big Brain Podcast. I'm your co-host, Larry Cermak, president of The Block. I'm joined by Namik, CSO of MegaETH, and today we have Kain joining us. Welcome, Kain.
Hey, guys. Good to be here.
Kain, how would you describe what you do to the audience that's listening that maybe is not as familiar? My understanding is that you wear many hats. Full-time, you're the founder of Infinex. You founded Synthetics. You have a family office. You also co-founded a fund called Bodhi Ventures. You are a real estate connoisseur, enjoyer of mansions. Can you tell the audience what you do, what you spend most of your time on?
Yeah, just those 5 simple things. It's really easy. And also I try to keep track of all the Big Brain Telegram chats. There were like 1,500 messages this morning when I woke up. I was like, we've talked about Monad 100 times, guys. Like, surely there's no, like, how do we still have 1,500 messages of Monad conversation? I guess some of it must have been Namik chaos, right?
Yeah.
MegaETH induced chaos. That actually makes a lot more sense. Okay.
But before we go further into that,
Sure.
I don't think people probably know much about what Big Brain is. So for the uninitiated, it's a group of people who like talking about what's going on in crypto. About 200 people, and we kind of shit talk back and forth about what's going on. And so that's where all 3 of us, I think, got a little bit closer over the last couple of years.
Yeah, that's true. That's true. And yeah, so in terms of what I do, I think like 85% of my time is on Infinex. It's my like primary job, I suppose. And then I am on the council for Synthetics. Basically, my job there is like incentive design, mechanism design stuff. So I'll jump in and like make suggestions, but day to day they run it themselves pretty comfortably. And then Bodhi Ventures is run by the co-founder of Synthetics, Jordan Momtazi, who lives in Lisbon. Weirdly, he doesn't live anywhere near me. I don't know what's going on there. He made enough money and he left Australia to get as far away from me as possible. But he's actually here at the moment. He's back in Sydney for like 6 weeks. So yeah, that's like, again, its own thing. They run it. We've got like a liquid book and a venture book and, you know, different people that run it. They rarely listen to me, and which is a good thing, I think. So yeah, that's most of my time.
They say money never sleeps, except when markets close at 4 p.m. and on weekends. That's opportunity lost to lend, to grow, to make moves. But now everything has changed. A first of its kind trade. US Treasuries financed with digital dollars. Immediate, after hours. Live on Canton, entirely on chain, privately transacted. Liquidity unlocked, whatever the time of day or night. Instant financing, settled atomically. Turning 24/7 collateral mobility into a reality. Trusted by the world's leading institutions and the next generation of builders. Real assets, real utility.
So Infinex is quite a departure, I think, from what we've seen built in the industry over the past couple of years. And what I mean by that is it's a very proud attempt at building like a wonderful front end for blockchains, right? So, and it's quite a difference from Synthetics. I'm curious to hear what's the problem you thought you needed to solve with Infinex, and how do you plan on like what is your 5-year vision for Infinex?
Yeah, so I think the situation with Synthetics in 2023 when I started Infinex was quite unsatisfying. I think even Larry said the other day, like, Synthetics is totally washed, right? And I think, you know, that's not an unfair comment, right? Like, a lot of the OG DeFi protocols, the vast majority of them failed to break out and get any kind of meaningful product market fit, sustainability in terms of revenue. Like you can count maybe like 5 of them that actually managed to do that. And I think most of them that were successful succeeded in spite of themselves oftentimes, right? Like the mechanism or the underlying protocol was so good, Aave was so good that like even if it was quite janky and hard to use in the early days, people just kind of figured out a way to do it. And so when I looked in 2023 and said, okay, like what went wrong? Why didn't this work? For me, it felt like UX was the problem. And so I was like, there is currently no incentive for anyone to build applications and better UX right now. There is no money in it. It's much better to go and build more infra, another L1 or whatever. And so I was like, there's actually a huge gap here for someone to, with the right incentives, right, who's already kind of made it by building infra to go, let me go and build something else. And you know, I started off doing it with a fairly simple idea, and it just evolved into something that was much bigger. But it now feels like a little bit more in the meta. There's a lot of super apps that are emerging, but back then in 2023, no one was thinking about, let me build a better interface.
Right. And do you think that, you know, right now the meta has sort of changed to like, you shouldn't even know that you're using DeFi, right? You shouldn't really even know that Hyperliquid is a sort of decentralized perp exchange. Was that something that you considered back then with Synthetics, or was it just like back then the meta was, at least my understanding was, it was more like, let's build something that's as decentralized as possible and let's figure out the rest later. Whereas it seems to have flipped now, where it's figure out the best interface, get users, and then let's fix the decentralization. Is that the right characterization, or is it different?
I think it's fair. I mean, it's interesting with Synthetics, there were a bunch of things that we did deliberately to be as decentralized as possible. Like that was the meta. The meta was like max decentralization. Maybe if you did something like crazily decentralized, Vitalik would notice you. And you know, not often, but you know, occasionally. And so yet despite that, right, despite like trying to be like maximally decentralized and all of these things, Synthetics still made compromises. Like we built our smart contracts with like upgradability, which in 2018 was like cancer. Like people were like, you're a monster, right? You can't do that. And so you know, there were compromises that we made, but I think that the fundamental kind of reason we did most of the things we did was the audience. Like the audience that we're catering to wanted things to be as hard as possible, super weird, like autistic level, like details that you could go down into. They didn't just want to use the thing; they wanted to like deconstruct it and understand it. And so that pushed a lot of the early DeFi projects into this kind of mode of like building things that were like super. Even if you look at governance and like some of the ancillary things, it was all about like the more complexity, the better. And we were like, it's fine. We'll just find more people that like this shit. And then like we didn't find any more people. Like the 500 people that cared about it were already there. They'd already found it. And so it was like, okay, we need to find a way to make this accessible, feel more useful.
So I've always enjoyed getting your takes on multi-chain, Kain, right? So what was interesting about Infinex is, I remember when Barrett chain went live, I tried to bridge and check out the chain, and like, it was impossible. I'm not even kidding. I tried to use a couple of these different bridge aggregators, and there was no Barra. There was no Barra that I could switch into. And then I saw a message from Kain saying use Switch, right? And Switch worked. So, and we've spoken about this in the past, which is a very strong thesis on like, hey, you know what? I'm not going to focus on any particular chain, any particular ecosystem. I'm going to go everywhere. I am curious, right? Like, what do you see as the role of Infinex today, right, for a user? But like increasingly more important, like, what do you see the role of Infinex like 5 years from now? Because I think Larry also mentioned this this Hyperliquid thing, right? Like, do users even need to know what Hyperliquid is? On Phantom, you don't know that you're using Hyperliquid. So what do you see as the vision for Infinex in the long run?
So I think the long-term vision, right, aligns with this role that we see, which is be the kind of mechanism by which people access these hard to access things, right? Like be the intermediary, right? And the application layer in almost everywhere else is the place where like the value accrues to, right? And if you're a good application layer, you have distribution, you have a lot of power in terms of like what you show the user, et cetera. It's why us building an L1 would be like the dumbest possible thing, right? Because all of a sudden now you've got channel conflict, you're competing with your partners, and they're like, wait, what? Like, I thought you were making it easy for people to get to my chain. I've got a job, build the best chain. Now you're building a chain that's competing with me. It just doesn't sit well. But it is a hard thing to pull off, I think, in the current environment, because you don't really get paid, at least until about 6 months ago, right? You didn't really get paid for building a good interface. No one believed that was going to accrue value. In 5 years' time, I think it's going to be so insanely obvious that people are going to look back and they'll do this like, kind of history whitewashing thing where they're like, oh no, we knew, like, of course, everything was going to be a pure play super app and Binance was going to be dead. And like, this is like so obvious. I totally saw this coming, right? I think that's where Infinex ends up. And you look at today, the centralized exchange landscape, there's 30 centralized exchanges that are worth more than $1 billion. So there will be 30 super apps that are worth more than $1 billion in 5 years' time. Some of them will be like, chain specific super apps where it's like the super app for all the stuff happening on Mega ETH, like that'll be a thing. Then there'll be some that are more agnostic. They support a lot of different chains, some that are specific niche use cases. Like this is the perp super app where you can do, there's 50 perp dexes. This gives you access to all 50 of them. I think there's going to be a lot of different ways that this plays out. But the idea that, you go back to Robert from Compound, right? Like the first thing that he ever said to me is like, the Compound interface is just a proof of concept. Eventually other people are going to come and build a much better interface than I could ever possibly build. And no one did, obviously, yet, right? Like it took like 8 years before that actually became a real thing that anyone would want to do. But now if Compound still existed, if there was, Infinex would be building an interface to Compound, a really good one, right? So would DeFi app, so would, Coinbase Wallet. So sometimes these things just take a long time to play out.
Do you plan on building any apps yourself? I know you don't want to build your own chain, but do you ever see a world in which Synthetics maybe natively integrates into Infinex or something, and you have this amazing user flow? Obviously, you capture more value as a business as well.
Well, it's interesting, right? Because we integrated Hyperliquid before Synthetics, and we'll probably integrate Lighter before Synthetics as well, I would say. And then putting my Infinex hat on, like, we'll send the flow wherever like is best for the user, right? The combination of best for the user and that, gives the best fill for the user and that generates revenue for us. That's our job, right?
That's what I was going to ask. So in this future world, there's Lighter, there's Hyperliquid, Synthetics, there's a bunch of perp dexes. They're all competing for the same things, right? Like users, liquidity, volume. How do you end up making a decision of what to pick for the user? Or would you also have the option to say, hey, like if Larry wants to go to Lighter instead of Hyperliquid, he has the option to, or would the default just be like, we're giving you the best available Bitcoin perp, so just go and use it? Like, how are you thinking about that? Or like user choice versus just like what you think is best for the user? Yeah,
curation versus user choice, right? Yeah. And this is where I also think different super apps will go down different paths, right? Windows versus Apple. Apple's like, no, bro, we're going to curate everything for you. You're going to use our software. Like, we're going to give you the best, cleanest thing, best UX, whatever. And then, an Amazon or a Microsoft or whatever is like, throw it all in a box and let the user figure it out, right? Like, let every weird, variant of every single product be listed all in one place and no curation, just like throw everything there. I think that is definitely a way that super apps will go. So you can imagine a super app that's like the perp super app that has every single perp dex on every single chain, the canonical, because every chain needs a perp dex now, right? So you're going to have 200 perp dexes and just a long list, and you like click the one you want to access, and maybe you can like rank them by like volume or liquidity or fees or incentives, most likely. I think Infinex will start off like that. We'll give you 5 boxes to click, and it's like, okay, do you want to go to I won't say GTE, but do you want to go to Aster? Cool. We're not going to get in your way. We're not going to be opinionated and say, no, don't use Aster. The next step from there is like, okay, you just want to buy ETH. Let us figure out the best place for you to buy ETH at this moment. Like, what's the best fill, and aggregate that. No one's really pulled that off yet. I think it's a hard problem. But if you do that, then the user doesn't care. Now, if the user says, actually, I do care, I really want to use Aster for some weird reason.
Do you think there's a token or something that they're not disclosing?
Yeah, then it's like, okay, I want to you could go in as a user and say, I only want to get aggregated through like Aster and Lighter right now, right? And then you imagine they switch that to, some other DEX or something. So, you give user preferences for the advanced users, but for the average user, you just say, just buy ETH, right? Like maybe not ETH, but like something that might go up.
And so help me understand like technically how this will work in the background. Let's say you have some money on Hyperliquid, right? And it's sitting under a USDC bridge, and all of a sudden, you say, well, Aster actually has a better fill right now. You want to go there. So how do you take the money that the user has in the Hyperliquid bridge and in the background, like quickly shift it to whatever it is, if it's whatever chain it is in the background? There's some complexity, right? Sometimes the chain itself, when you have it on it, they require you to have gas in that specific token. Like, It's a clusterfuck. Like, even we have a head of finance at the block. Like, it's so fucking difficult. Someone will send us money to Polygon. No one uses Polygon anymore, but like, you have to buy fucking POL or whatever the token is called. And
Infinex solves that. Just tell them to send
Infinex solves that, but how can you tell like the listeners that are maybe slightly more technical how that actually works? Like, if the user doesn't have POL, how do you figure that out? Like, how do you then subtract the amount from the user's wallet? Like, how does it convert in the background? Like, I would love to understand that myself.
So there's 2 components to it. One is we have 7702 sponsored transactions. So we use Gelato. Which is unfortunately how we got rugged on the Mon launch, although I think we're going live. By the time this is published, we'll be live finally. We were like 24 hours too slow. So we have, first of all, like sponsored transactions. So that's the first immediate solution is you yourself in your Infinex account don't have to have Paul. We will sponsor the transaction for you. If it's on a cheap chain, we cover the cost of that. And we figure if you're doing all your activity in Infinex, of course, if you're spending thousands of dollars on Paul transactions, we might have a conversation about that. But for most users, like you're spending 10 cents, right? So we just say, don't worry about it. We'll cover it. We figure at some point you'll do something that makes money. So that's the simple immediate answer. Is just sponsored transactions, and then wiring that up to a bunch of different DEX aggregators, aggregators of aggregators, intents providers, etc. And the intents providers are already starting to solve this margin problem of have just-in-time liquidity across all of these different chains, sitting inside the Arbitrum bridge, sitting inside, Lighter, where they can very quickly get that intent. Okay, I want margin in Lighter in 10 seconds or whatever. Now, latency then becomes a question of like, how quickly does the user need it? Do you want it to be just in time? Is the 30-second delay okay? You can go very deep down this, and it's just a cost trade-off, right? Like, if you want to have capital sitting on all of those different things that's like available to immediately fund the user, then the intents provider is going to charge for that. So, if you're constantly moving margin back and forth across these accounts, then it'll probably be expensive. So you might be better off splitting your margin across the accounts so that you've got, margin there. But we make that job really easy. And, we'll say, hey, you haven't used Lighter for the last week. Why don't you pull your margin off and put it back onto Hyperliquid or whatever? And again, single click, we do the transaction, sponsor it, it's done. It gets a little more dicey with our wallet import functionality. And this is something that we're about to roll out, and we don't really have a good sense of how people are going to react to this because we can't just use sponsored transactions for all of these things. So we're going to have a global gas account that, again, we will help you to fund. It doesn't need much for most chains. It's like $5 or $10. You pre-fund the gas account, and then we'll debit that and top it up periodically, so that you don't need to think about gas. The nice thing is you fund it on one chain, you go to Polygon, and you don't need to worry about that. You go to Mega ETH, we give you Mega, it's fine. Like, we cover that wherever you are, and you fund it in USDC.
I'm curious, where does the money sit when it's not being used actively, right? So do you route it back to like some kind of home chain? How does that work?
Yeah, so in the gas account, it's most likely going to live on a cheap, fast chain. User preference, again, will kind of win out on this. If it'll probably be wherever you had the USDC or wherever you funded it from. So if you funded it from Sol, we'd probably swap it from Sol into USDC and fund the gas account on Sol. If you were on Mega, you swap some Mega into USDC and we just leave it on Mega. We don't really mind where it is. We just do the accounting in the background.
But sort of like the long-term design favors cheaper chains. So like
Yes.
someone having money on Ethereum, might not make the most sense because those transactions will end up costing a lot more. So you would sort of prefer that they have it on like Base or something, which will be
Exactly.
a lot cheaper.
Yeah.
And so how do you think about, I always wondered, like, I have the same, I completely agree with you when you say like this is the next step for crypto. Like it's the most natural one. It's so fucking complex still to this day. Most people don't get it. Like even MetaMask adding Monad yesterday, like it was a clusterfuck. They still show everything in ETH. Like it's not super well integrated. They've known for months, and like it's still not working. You have to switch the chains in the interface. Like it's just terrible. So I think you're right. Why do you think there's like such a disparity of like everyone now building chains, perp dexes, everyone like focuses on the things that are working right now versus let's try to build something for the future? Like my understanding is that there's not many competitors of Infinex. Like these super apps don't really exist outside of what you guys are doing. At least I haven't heard of many. Why is that? Like why?
It's still hard, like funding, right? Like it all comes down to funding. The thing that I say to founders all the time is it is far easier to raise money with tailwinds behind you, right? That you're following a meta. So raising for a perp dex right now, super easy, right? Raising for a super app, still not. It's not really consensus. There aren't a ton of super apps that have like pulled a 10x or 50x or whatever. As soon as there is one, I promise you, and I've seen this movie before. Don't worry, right? Like. Synthetics as a perp dex, the number of forks on chains, it was like one a week for a period of time. And that was all of DeFi as well, right? Like, there were like a million Uniswap forks, whatever. So I fully expect that we will see a lot more super apps emerge once there is a very strong category leader. And I don't think we have one yet. Interestingly, we've got like Coinbase Wallet, but it's in this weird Coinbase thing where people don't see it as a separate thing. It's quite good. But Phantom scares me for what it's worth. Like Phantom as a super app, they are really starting to get their shit together and like just release stuff, like very quickly. They started from a dumb form factor, and so they're kind of fighting against that a little bit. But they're very quickly unwinding that and leaning into mobile app, etc. So I think that Phantom becomes a super app if it isn't already, right? I think MetaMask probably becomes a super app. I think Coinbase Wallet becomes a super app. I think things will transform. Even OKX is trying to transform itself into a super app, super wallet sort of thing, right? So the world is figuring this out and figuring out how, particularly the centralized exchanges, how do they become a hybrid on-chain, off-chain thing? Because if they stay fully off-chain, centralized and siloed, they're dead. I think look at Monad today. Like they, faded Binance and it was like bullish for them. That's pretty crazy.
And do you think that like you being in your position where you can kind of get ahead of like you don't need to raise a lot of money from VCs, like you kind of like build your own name already on Synthetics, you have your own capital, so you could self-fund a bunch of this yourself. Is that just like an unfair advantage compared to let's say someone else thinking, but what's...
I think it's an unfair advantage. I funded Infinex for the first 2 years to the tune of like 15 mil, right? That's an unfair advantage for sure, right? Like no one would have given me 15 mil to do Infinex in 2023, like zero chance, right? So that, we have a big team. We got like 60 people. This is a hard thing. Like it's actually harder than some of the things that, building a blockchain, like that's a pretty, no offense, right? But like it's a pretty known thing. You can definitely optimize at the margins for sure, but like building a super app right now, there's no template of how to do it. And so it takes a lot of people, a lot of thrashing, a lot of insanity to kind of get there. I think the other thing is, as a, like second time crypto founder, you can raise for whatever you want on some level, right? Like Robert's out there raising for like RWAs. If a first time founder turned up with that pitch, I think it would be a tough one, right? So yeah, I think there is definitely an advantage in being a second time founder. And the flip side of that is I have also chosen to go in a direction that's disadvantageous to myself, doing something that's non-consensus early, especially in 2023. It was way too early. I couldn't even raise at all for it because I felt like this is where the space was going. And, 3-4 years later, that it would pay off.
So I remember a few months, you had the Infinex patron sale. I think that was a massive success, got a lot of people involved. And then a few months later, I saw some YAP Run drama on the timeline. So what exactly happened? I'm just curious to hear kind of like, it's interesting because it's almost like trying to get, a lot of stakeholders super happy, right? Like you went with this, I remember talking to you way back when. You were the first person to really, at least in my opinion, push forward of this skin in the game public sale strategy, right? So I think, you did it, had some hard times with like airdrop farmers. So I'm curious to hear, like, you've seen both. What do you think makes sense?
Yeah, the YAP Run thing, it's interesting, right? Like InfoFi had this moment in the sun, right? This idea that you could incentivize people to do like discovery and dissemination of information. Like we have that incentive. It's called making money, right? But by trying to like kind of industrialize it, I think it broke a little bit. And so we saw Kaito, a couple of my team saw Kaito, and they're like, we really like this. And I was like, I don't know. And they sat me down and they walked me through the whole mechanics. And in the space of half an hour, I was converted. I was like, this is genius. This is going to go crazy. People are going to love this. Monetizing their attention directly is going to be amazing. I looked at some of the people who were early to it and I was like, okay, this is amazing. And the problem was that Kaito went from a curated set of people that had an incentive to not sort of shit where they eat and blow the thing up, right? Reputational downside if they turn their accounts into like industrial slot farms, right? And Kaito was like, okay, this is working amazingly well. We've got like 500 people. Then they're like, we got 2,000 people. Then they're like, okay, what about 2 trillion people? And it was like, wait, what? Like, what? Stop. No, this is really bad. And in the space of literally a month, it went from like this amazing thing where you're getting high signal people that were being paid to pay attention to up and coming projects and like learn about them and provide good content into just a wall of slop, the likes of which we've rarely seen in crypto. And it became just net negative. And then when we turned around, and this is the wildest thing about InfoFi, right, is like the kind of psyops that InfoFi people have at their disposal. So then it was like, actually, guys, this is bad. And they were like, oh, you are going to pay, sir. And they had just like 10,000 person bot farms just surround everything, brigade everything, replying to each other. Like they would have these reply chains where it was like, this guy is the worst founder in history. And then like 5 people would turn up and be like, I know, I've looked at all the other founders and there's no founder this bad. And then someone else would come in and be like, I've just heard about this founder. I can't believe, and it was just like, would go on and on and on and on. And Luckily, I've been on Twitter long enough to like not be completely insensitive to punishment. But it was wild. Like it was actually a crazy like psyops campaign that these bot farms were running because we took away their money. And so they were like,
it's
now
funny.
you will die.
Yeah, it's funny, right? Like the US goes into all of these emerging markets, funds like the local militia to, take out the regime or whatever. And then when it backfires on them and they come after the US, they're like, wait, what happened? It's kind of similar.
It was
with
literally
CP,
there.
right? Like,
yeah. We were like, what if we have these bot farms that are working for us and then they turned on us and it was like, okay.
I want to double down on what Namik said, which I don't think many listeners probably realize, but Kain, I think you were like the first person who wanted to do like an NFT sale of your tokens. And three years ago when you told me, I remember you told me in Dubai, I thought like this guy might end up in prison. Like it's just like back then the environment was so different than it is today when like it was the previous administration. It was not clear if Trump would win. And you were like, well, I want to sell tokens on chain to no KYC people and I'll make it work through NFTs. And I was like, that's crazy. I liked it, but like this guy might be in prison in a couple of years. And that meta has changed so much now. Yeah. Now you have Mega ETH Monad, you have Coinbase doing a sale every month. Clearly now the meta has changed to like airdrops are less important. Let's actually try to get people to buy in so that they have more of a reason to actually hold the token, more of a reason to actually catch up, not just dump the token immediately as soon as they get the airdrop. So what made you like so high conviction that this is something that will come back? And like, do you think that was kind of a good insight, or do you think that you got lucky a little bit with Trump winning and like this shift happening so much faster?
I mean, my thesis when we did it was that Trump would get in. Like that was my, the hedge was the NFT, right? The hedge was like, okay, do it as an NFT. Be like, no, it's like just liquid JPEGs. It's fine, right? But in the end, I was so convinced that if we didn't, I went through the original ICO era, right? As you guys did, and as a founder who created an ICO project that would have otherwise died if it didn't do an ICO, there were a whole bunch of downsides. But the core community that we built that came out of that ICO would not have existed if we had done like multiple VC background. It would be just dead. It would be in the graveyard, gone, right? And so, I knew the power of having tokens widely distributed to people who, paid a fair price and made a conviction bet and held and did well from that. And so I was like, all right, how do we replicate this today? And an NFT mint was the hedge against regulatory kind of overreach or whatever. I thought that we could do it in a way that would be like, okay, it's aggressive. In the end, it being $70 million, it was probably lucky that Trump got in because that would have definitely gotten some scrutiny back in the old days. But it's worked out. It was the right approach. It was the right decision. We sold 45% of the tokens. We sold them to a bunch of people. Most people paid 125 mil FTV. The FTV is sitting at 450 still. A year later, the whole thing didn't get dumped into oblivion. It worked out well. And 90% of people still holding. Almost no one sold. So the difference between buying a token and being given it for free is a qualitative difference, not a quantitative difference.
And let's shift the discussion then to you guys approaching the launch. You've tweeted about this. You wrote a bunch of blog posts, and by launch I mean like public launch of the token itself, which you've been planning for 3 years. Tell us about how you're thinking about TGE, how things have changed from when you did synthetics. Like how is the landscape different now? Obviously, at least from my perspective, there's now endless of tokens. So back then there was a lot as well, but the quality ones, there were maybe 15 that I had to pay attention to. Now there's maybe like 100, if not more. You're competing for liquidity, for exchanges, for attention, so many different things. So as a founder, I would be insanely overwhelmed. And then also you're actually fighting against someone like some greedy exchanges that take 5% of your token if you want to get listed on their exchanges. So how do you look at that entire process, how that has changed over the last 5 years, and what are your plans to get the token out there and kind of maximize attention and use the token to get as many users as possible?
Yeah, I mean, just talking about exchanges, with Synthetics, we made a decision not to pay for listings. We never paid for a listing, and arguably to our detriment, because it took us 2.5 years to get Binance. It took us like 18 months to get Upbit and BitThumb. Coinbase was just like a nightmare of like we must have had 100 meetings with people at Coinbase. We would have like the 8th meeting and then it'd be a whole other team. And we're like, what happened? And they're like, sorry, that guy's gone now. He's retired. there's a new guy that's taken over from him. And so I think having been through the trenches on the other side of like token listings and everything and seeing it, and also seeing just how much better on-chain liquidity is, you didn't have a choice. Like, what were you going to do? Get listed on either Delta? Like, KuCoin was a far better, KuCoin and Gate, if that was all you could get, were far, far more liquid and far better as a token project than like whatever, like IDEX. Like literally, like it was dark. And so I think that today that's very different. One of the challenges, though, is where do we put this token? How are we supposed to stay incredibly neutral if we have to pick a chain to put the token, right? And so that's something we've been like really thrashing on. Like, do you go Solana? Do you go Ethereum? Like, do you go an L2? It's a really difficult question to answer. But interestingly, I think even looking at Monad, right? And there's been the nice thing about this space is there's always new empirical information for you to ingest, right? And so looking at Monad, they did this, launching their own token, then Sunrise, they got listed on all the Solana places, a bunch of DEX liquidity. So we're looking at all of those options, but I don't think centralized exchanges are the be all and end all that they were back in the day. Obviously still helpful. But when you have optionality, back in the day, you had no choice. You had to beg and grovel exchanges to list you. Otherwise, your project would be dead. Now you can play it a different way.
And how do you think, like Monad, for example, on some exchanges, they even had like deposit on the Solana chain, right?
Yeah.
Which was quite weird. I don't know if there was a technical reason. It makes sense, right? Yeah. So like if I was you, I would be thinking about it in terms of like what makes it the easiest for exchanges to integrate you, because 100%. They're slow as shit. They're like just like slow and lazy, and they don't want to invest money, and they just want to make money off the trading fees, right? So
yeah,
how do you make it easy? The easiest?
Make it easy. Yeah. I think make it as easy as possible.
And in terms of like on-chain liquidity, my understanding is that a lot of on-chain liquidity is still on Ethereum, despite like higher fees, right? 100%. Like Solana is not really even that competitive. Maybe it is now, but like Ethereum was kind of the go-to. So have you thought about maybe having like a multi-chain token on multiple places? Like, is that possible even?
The irony of ironies, right, is like if anyone could pull off a multi-chain token, it should be us.
It should be you. Yeah.
It should be us, right? But even more ironically, the second level of irony is like, actually, we don't need to do a multi-chain token because a single chain token, we can abstract that away just as easily, right? So then you're back to like, actually just put it in one place and concentrate the liquidity. So it's because it doesn't really matter, right? Like you should be chain abstracted. It can be anywhere. Which means, again, we don't have a good answer. I think the default is probably put it in the place where the NFT is, which is Ethereum, and then find ways to bridge liquidity as effectively and efficiently as possible to other places. That's probably the solution. So yeah, I mean, I guess the other component of like pre-TGE, like what are we planning? We need to maximize, YAP Run worked until it didn't. It was actually really good for a while, and then it blew up in our faces. And so we've been kind of heads down building product, right? And guys, the amount of OGs that have turned up, people who went in the patron sale a year ago, who have been DMing me over the last 2 weeks as we've been ramping up in the campaign, all of a sudden the incentives and crates and all this stuff come out, and they like dust off their account. They're like, I better go and figure out how to farm this thing, right? And they're like, oh, wow, this thing's actually really good. And I was like, when was the last time you logged in? And it's like 1982. Like they haven't touched the thing for like 20 years. And so getting the attention of the lazy whales and the OGs who, just it's hard to motivate them to do stuff is a big component of the next like 6 weeks to maximize attention, maximize mindshare, maximize usage. And so our Crate Run campaign is designed to re-engage a bunch of those people. So one of the things which is inspired a little bit by what you guys did with Mega ETH is let's look at the user's kind of attention score, right? And give them some crates. We call it like the CT mafia, right? Because I think, talking about airdrops, right? Like if you don't pay an airdrop, you got some guy that's standing outside your house, right? Going, hey, like, I'd be ashamed if your house
Where is
burned
it,
down.
buddy?
Yeah, like holding a sack to put the cash into, right? And if you don't do it, they're like, look, like, I don't want to hurt you, but I will. And that's what these airdrops for the CT kind of, KOLs have turned into. If you fade them and you say, no, I'm not giving you free money, they go, what, me? You're not giving me free money? No, you're going to give me free money. I'll get my money. I'll get it. You can give it. We can do it the easy way or the hard way. I don't want to have to come into your house and take it, but I will. And so like there's this element of like threat from people on CT where, and it's not everyone, right? But there's a kind of a cabal of people that are like, you need to pay me. I've earned this airdrop. And this is why Monad was so funny, right? Because they did I love Monad, right? But like they did this convoluted thing which was unclear, and the CT mafia were like, why the fuck are you making me open another box? I don't want to open another box. Just give me the fucking money. I said put it in the sack, and you're like turning this into a Easter egg hunt. Like just give me the fucking money and put it in the sack and everything's going to be fine. I'll do a couple of nice tweets and you can go on your way. And so we are like, let's just cut out the middleman there and not make this convoluted. We'll give you the crates. You can get some tokens, get some cash, and hopefully they're satisfied.
And Kain, tell us about, now you guys are approaching TGE, a lot of projects, including Mega ETH, including Monad, including a bunch of other ones. They're doing a pre-launch sale, right? Some of them on the Coinbase platform it just launched, some of them on Echo. There's a bunch of other platforms as well. Is that something that you guys are considering as well?
Yeah, so we're going to do a Sonar sale next month. That's the plan. And we did Echo as well. I think we had 3 different groups that did the patron sale in Echo. And the people who did that Echo sale have been some of the most helpful, engaged people, and I think part of the reason why, interestingly, those Echo users, especially the early Echo users, have been so helpful versus, say, your classic CT KOLs who might have gone into the patron sale, but then didn't really care, is there is a sense of like almost gratitude from the people who got access to early deals in Echo that they know they wouldn't have otherwise gotten, right? If Kobe didn't launch Echo, they don't get those deals. And so those people have been awesome. And so the Sonar sale, we are going to, this is the challenge, right? Like, and Namik, feels the pain of this. His eyeballs are still probably bleeding from looking at everyone's Twitter profile and like going like 8,000 tweets down to find the tweet that says Mega ETH's bad. But yeah, so you've got a scarce resource that you have to distribute, right? Like if you don't make it cheap, then no one will care. So you've got to make it cheap enough that people are really interested. And it can't, there's it's really hard because there's like a line where it goes, it's very reflexive, right? You go, if you try to actually top ticket and like perfectly align demand and supply and like get the exact right price, actually demand disappears. And so you've got to maximize demand by going so cheap, but then you've got 150,000 people that want to get into Mega ETH, and then you're sitting there like, scratching off names off the list and figuring it out. So we understand that we're going to have to find a way to distribute this scarce resource. It's just a question of how. So the way that we're going to do it, the proposal, and feel free to pick this apart, is two ways. If you have a liquid patron that either you bought in the sale or whatever, that you are still holding, you haven't cheated it, you've been holding it for a year, you get an allocation for each liquid patron that you hold, and patrons will eat first, right? So if you have 5 patrons, you get 3K per patron. If you have 25 patrons, you get 4K. If you have 100 patrons, you get 5K. So it's actually super linear, right? So the more patrons you've held for the longer, the more allocation you get.
And what about the locked patrons?
Unfortunately, well, so you actually have some liquid patron. If you did the patron sale, the nice thing is you've got 2 months of liquidity. So
oh wow, okay,
yeah.
And
so
you can log back on.
Well, look at this. This is a guy that like hasn't like immediately on the 24th of October when liquidity hit, didn't immediately like insta-cheat it, right? Because he's like, I'm busy guy, I'm building something. Like that's the type of person you want holding your token. Someone who's not like instantly waiting to rip your face off and sell everything, right? And so for people who haven't sold, for people who held their liquid patrons, they get an allocation. And that will cover, we think, like 50, 60% of the sale. And then the rest of it will be just a pure lottery, which is inefficient and whatever, but like it's just easier that way. It's going to be like more like Echo, except obviously most Echo things were a race. There were pseudo gas war. This way we'll just let everyone come in, they bid whatever they bid from 200 to 5K, and then it's a lottery. And if we have 10,000 people who bid and there's only 3,000 spots, then 1 in 3 chance and good luck.
So the max check size is 5K
for the lottery component, right? So patrons, the max check size is up to 500K if you hold 100 patrons. If you don't hold any patrons, then you go into the lottery side and max check is 5K.
Okay, I think that's pretty elegant. Because I think the issue with a lottery is if you don't have a cap, it just obviously incentivizes whales and benefits whales.
Yeah. So we take the whales out.
Anti-Sybil?
Sorry.
Like, are you going to do any like Sybil checking? Like, what's your plan there?
Yeah, I mean, the Sonar anti-sibling, obviously they did a lot of work for you guys already, right? So we'll inherit that. So thank you. I appreciate the pain and suffering that you guys went through there. So I think that already is like a good anti-Sybil component. I think the other thing, obviously, is as a lottery, there is definitely a strong Sybil incentive. But if there is significant demand, the cost of setting up the Sybils, doing a full max bid, trying to maximize, like the cost becomes quite high, right? You might be allocating, hundreds and hundreds of thousands of dollars to get maybe 10K allocation. Versus to your point, if you let people max bid, it's like, yeah, sure, I'll throw in $1 million and hope, right, on 3 accounts or something like that. Hope one hits.
Yeah.
There's interesting game theory there around like how to do that. But I think the low cap means, sure, like there'll be some industrial Sibblers, but hopefully Sonar catches them.
By the time that the sale is done, Kain, how much of the supply will have been sold in these sales that you have done throughout the time? Because at least my understanding is that it's a lot more than other projects. Other projects generally do 10, 15%. I think with you, it's going to be much higher than that. And how do you think about that being sort of different than the consensus right now, which is generally a lot less?
Yeah, so it's an interesting dynamic, right? Because we sold a lot, but most of it is still locked because there was a 2-year linear vesting, right? And this is something that I feel really strongly about, like not having these chunky cliff-based unlocks, like quarterly unlocks and stuff like that. I think linear is just the elegant, like we came up with a really good solution of like on-chain linear vesting, and people weirdly keep going back to like the TradFi quarterly thing. It's like we've got a distributed ledger that can do this for us, right? So my view is like that creates an interesting dynamic where quarterly vesting, it's like, yeah, quarterly, claim and dump, fine.
Yeah.
Linear vesting, it's like you're kind of dumping on yourself whenever you do it, and there's no real like stage gate to go through where you're like, okay, fine, I've finally got some liquidity. Let me go. So I do think that helps to ease dumping. I think the other thing is the people who bought patrons, most of them are fairly diamond-handed. There's been a few, but like it's been the minority of people who've even claimed the patron. Most of the patrons are still sitting unclaimed from that sale. So we did 45-ish% in the patron sales, much more like a classical ICO, a big sale at low-ish FDV. This will be another 10%. And then we'll also have another 10% that will go out through vouchers in our Create Run campaign. So it'll end up being like 70-ish% of the tokens are distributed.
Final question on my end.
Mm-hmm.
Yeah.
Go for it.
What does a token do? What's the utility of the token? Now, you imagine an FTT situation where, hold the token, get discounted fees. What's the plan?
Yeah, so I think there's two components. One is like on-platform utility. So already patrons pay no gas. So we have full gas subsidies. They get access to early features. They get access to better rebates on different products. So it will evolve from a pure binary patron, non-patron structure that we have now to probably a tiered system when we have INX. So when the INX token comes out, it'll be like, okay, stake this much, this much, this much, and get better fees. So that's on the product side, like use the product, get early access. The more you have, the better access you get, et cetera. There's levels. And then from a revenue distribution, it's just buybacks, token buybacks.
And what are the revenue streams? Front-end fees?
So at the moment, front-end fees for builder fees. So on the perp side, we're going to have Synthetics, Lighter, Hyperliquid. So builder fees, Lighter is going to have something. Synthetics already has a rebate structure. So on perps and then maybe Aster as well, they'll have some. So some kind of fee capture from perps. We also have this cross-chain DEX aggregator, which at the moment has no fees. But at some point we'll probably switch on fees. We'll definitely switch on fees in the extension, in like the browser extension. And so, probably not 1%, but maybe 10, 15 bips or something like that. And then we're going to have a trading terminal that will be a cross-chain trading terminal. So Solana and some of the L2s. So there's, a super app like a centralized exchange has many, many different revenue streams, right? So the goal is just build up sustainable revenue streams that are diversified.
Last question I have for you, Kain. How do you plan to use the token to compete with the likes of, MetaMask, Coinbase Wallet, all these competitors that you mentioned? They're maybe not at your level yet in terms of what they're doing, but they already have, orders of magnitude more users. How do you use the token to compete with them?
Yeah, I think, vampire attacks are a very obvious play. Creating the right incentives for people to come across. We are, I think, 90% of the way there for like feature parity with most of these things. And, even arguably like Phantom and MetaMask don't have feature parity with each other. They've got different things. But everyone is very much in a war to kind of reach feature parity or get to a level of feature dominance. So my view is that tokens are one of the most strong incentive vectors that you have from a growth strategy. So if you use a token well, it can be extremely effective. And having a token versus a non-token project, you should really be able to run rings around them, all things being equal.
Well, with that said, Kain, thank you so much for joining. Enjoy the conversation and good luck on the sale and on the launch.
Good luck.
Yeah. Thanks, guys. Appreciate it. Talk soon.
Thank you.